Thanks very much for having me here today. That early this morning. My name is Peter Schneck. I'm the CEO of Cenit. And just to start with, why we have this kind of bizarre name. It's an abbreviation for Center of IT and Digitalization, because this is what we're focused on and what we're doing. So what I would like to do is to run you through Cenit in a nutshell. If you just look at Cenit at a glance, we have been established in 1988 by 5 former employees of IBM, because at that time, IBM was the sales representative of Dassault Systèmes, which is a French software company in the German market. They decided to split, and this is where Cenit was basically founded, because they were looking for a sales company in the German market. And this is how Cenit started. We were then listed in the German stock market, the Prime Standard, in 1998. So right at the hot phase, as you all know, around 2000, this was the new market. Everybody wanted to be publicly listed. And honestly, up until today, we haven't really used all the potential of a capital market, but that's another thing. So as of today, we're present in 9 countries with 29 locations. Main focus are the so-called German-speaking countries, DACH, which is Germany, Austria, and Switzerland. Then France, because we have in France a pretty big entity that we acquired in 2017. And we're a service provider for Airbus in Toulouse, Hamburg, and Madrid. And we have a so-called extended development team in Romania. So these are the main countries that we're focused on. We have done an acquisition last year with Analysis Prime in the United States to expand our presence over there. So now we are 84 employees in the US and covering the US market also with this team. In 2024, we achieved 207 million in sales with a kind of lousy EBIT of 11.4 million EBITDA. And I will come to this, what our strategy is and why we are in a kind of restructuring mode, but also, of course, acquisition mode in this organization. The equity ratio by end of 2024 was about 30%. And as of today, we have more than 1,000 employees. As you can see here, we have 984 employees that are fixed employees and 57 that are trainees, students, or apprentices. As you can see, we have a quite strong presence in this field, because we think that it's the easiest if we get youngsters in our team and we can train them on our products. So what are we doing? This is exactly what the question is. As I said, Cenit, Center for IT and Digitalization. So we're very much focused on the manufacturing industry. This is our home turf. And in this area, what we do is we provide software for design and production. We then, of course, provide also the consulting and the implementation services for those products that I will come to in a later stage. And of course, also we do documentation logistics around manufacturing, but also around banking for historical reasons. As you can see here, the Cenit Group has, as of today, several team members that we acquired in the past 3 years. So we have started an acquisition strategy, and I will come to this as well. Now, as of today, we have 5 different business units in our organization, and I hope that I can translate to you then also how they are connected and what this red digital stream is between those divisions, because what we deliver to our customers by those business units is really end-to-end services for manufacturing, which is a unique selling point in this environment on a global level, not only in Europe, but really on a global level. So the first division that we have is what we call 3DS Solutions. So what are these guys doing? It's a PLM system, product lifecycle management system, that is developed by a company called Dassault Systèmes, which is the 2nd largest software company in Europe. And you might know the Rafale, which is a fighter plane that has been developed by Dassault. And why they were developing this plane on usual design boards, as you all know them still, with paper and sticks. they came to the conclusion that it would be nice to have a digital connection and basically to develop a digital board. And this was the birth of a product called Katia, which nowadays in the 7th version is available and is called 3DX. So this is the stream that we're doing at the moment, 110 million euros in a nutshell, in revenue with this team. This team is present in all kind of segments that are related to manufacturing. We're very strong, so about 30% of our revenues in the automotive sector. Then the second largest is the aero space and defense, and the third largest entity is the classic manufacturing, the mid-market that you find here in Germany. That is a very strong one. And when we call about mid-market or mid-sized companies, this goes up to companies that have an annual revenue of 5 to 6 billion euros a year. Of this, just this team is covering 3,500 customers in the markets that I just mentioned. The second entity in our group is called SAP Solutions. And as you can hear by the name, it's focused on SAP. But, and this is important to mention, we're working now with SAP for about 35 years. We're able to develop down into their core, which is very limited, and we're one of the few companies that really can develop into the core. But as of today, we honestly haven't sold any SAP license. You see that we're a platinum partner, but not for sales. We're a platinum partner because we're connecting with our proprietary software. So 100% proprietary software, the SAP data lake, with the data lake of the 3DS Solutions means of Dassault. Both companies are competitors in certain areas. They have a kind of difficult history, so they don't talk to each other. And we are in a very good strategic position because most of the customers in the manufacturing environment, at least in Europe, they're focused on SAP as an ERP system. And on the other hand, at least 36% worldwide customers are using Dassault System solutions. The main competitor in this area is Siemens, and they just have half of this share. So now you have two data lakes and they're not talking to each other. And by our software, we're connecting them, which is key, because when you're producing a car or a plane or whatever other utility, or it might even be also a sports shoe, so the Adidas, Pumas and whatever of this world are as well as our customers, then of course you have to know whether you have all the parts in your storage, and you have to do all the purchasing and everything in the background related to the production. And this is what we do in this area. So in this area, we're covering at the moment about 1,500 customers that in some cases are of course double customers because they already have a 3DS solution, which means they're already on our customer plate. Then the third division is what we call Digital Factory Solutions. So this is a team that is specialized on offline programming. So what we do is we have a solution to handle, to control, to program industrial robots in the welding area, and of course also in other production areas. So you will see our solutions or the software as a white label solution on Prima, on KUKA, Kawasaki, and other manufacturers of bots. And this solution is again a 100% proprietary solution that we're selling to those companies or also to end customers if they want to program or digital twin their robot cells. And then the fourth division is the Enterprise Information Management Solution. What we're doing here in this area is basically documentation and archiving of documents. So we're using FileNet, which is an IBM product. That's why you also see that we're an IBM Platinum partner. Based on this one, we have our own 100% proprietary solution called Ecclesio, which structures the data, extracts information out of this data. And then we have, meanwhile, also an AI level called Build Simple. This product is used in 42 different use cases by several hundred of customers now. So when we talk about AI, this is not a PowerPoint presentation where we have real use cases where customers are saving money, and this is why they invest in this solution. This solution is more likely coming from the financial area. So in former times, we did a lot of banks and agencies in the financial area where you had to store and to structure data, and then of course also insurances joined. Nowadays, we're using this also in the manufacturing. And now I try to set up for you the digital accord through this whole 4 divisions as you have seen so far. You start designing a product, which you do on our design product 3DS solutions. Then you check in your storage whether you have all the parts and the invoicing and everything is handled. Then you come down to the shop floor and you use in the bots our solution Fast Suite also for digital twinning to see whether you have the best use of your machines. And finally, all the documents, everything that has been developed, including manuals, is structured by our documentation solution in the AEM segment that you see here. And the 5th division, which is the bottom line here called Digital Business Services, this is basically application managed services for all the aforementioned 4 divisions. In reality, at the moment, about 90% of my team and revenues in this segment comes through the automotive sector with Porsche and MAN, but mainly with Airbus, because we're in all their production sites and making sure that they can use the 4 products as you've seen on the upper level in the right manner. So this is an area for us to expand. The bottleneck here is resources, and then of course also quite strong competition because we're a so-called tier 1 supplier for Airbus, where we're fighting with Accenture, Tata, Capgemini. So this is not an easy fight. We're doing all these services with German, French, and Romanian team members. And at the moment, at least, we're not using any Indian or Far East team members. So that's why this is a pricing issue. But on the other hand, we have a strong lead in know-how and of course also quality. This is why customers choose to go with us. To give you an idea, when we look at the market that we're in, when we just talk about, and this is this first column that you see, 110 million revenues that we did, what is the global market for PLM in the coming next years? And you see that there's quite some potential. We're now in year 2025, that there will be at least another 20 billion in revenues that are distributed here. So we have an 8% CAGR over this period from 23 to 29, and this is exactly the area that we're in. So if today you want to stay in Europe with your production, or you have to for legal, political, whatever reasons, this is the only way how you can increase your efficiency in the product development. You see here, we have this average 19% saving that you can achieve. You can reduce the time to market because it's all digitalized. It gives you already some proposals. When you start to design a plane, it's not a blank sheet. You already have an idea, and the system will ask you, okay, how many passengers do you want to handle? What is the distance and all these kind of things? And you will already have a kind of starting point so that then you can do further developments, which reduces the time to market of new products, new developments, especially in the lifestyle segment. So as I mentioned before, Adidas, Puma, Nike, all those customers, they use this as of today, in many cases even print it immediately from this solution. And then of course also key, especially in the German market now, especially in the automotive sector, you can reduce your production costs by 13%. So there is quite some potential. This is the message that I want to send you for the total market. This is not a view of Cenit. This is an independent view of PwC and others. Now, if you look at our shares that we had, the share of our revenues in last year, you see that we had, since there's quite a dip in the automotive sector, we made 28% in 2024 of our revenues with automotive companies. These are the OEMs, but on top, of course, also all their suppliers. So you have to know that when a BMW or a Volkswagen decides to go with the SO, then this is a decision and one-time sale, of course. But then on top, you have up to 300 to 500 suppliers that have to switch to a new platform so that they can deliver in the right format. So there's always quite potential for us. Then you see 18% in the manufacturing segment, 16% in the aerospace and defense. So these are the three pillars that we're in. And the strategy that we're following now is to move into the upper area, what you see here, this colored area that I extracted a little bit, because these are what I call accidents. So the customers came to us and asked us whether they might use our solutions in their environments. We did adjustments and entered into those segments, and now it's up to us to introduce our solutions into those areas. And the latest, and I think very successful move that we did is we moved into the construction area. We have a customer that is keen to introduce the experiences from the automotive and aerospace environment and the automation lessons learned of these segments into the construction segment, where they basically want to develop prepared houses and of course increase the delivery to the market, especially for social houses in the lower segments, and to make this much faster. So also there's quite some future, and there's quite a bright way. Now, if I introduce you to our figures, you will see that in Q1 we had, of course, an increase in revenues and in gross profit. So we have done an acquisition. There's the market that is growing. So I don't want to dip into this too much, but I think what is important to understand is when you look into these figures, because on the first glance, they look shocking. We had a decline in EBITDA, and a massive one, as you can see here, always in the area of 5 million. And also the EBIT dropped, but this was something that we announced already and that we had planned for, because this is a restructuring case. When I took on my duties here at Cenit 3.5 years ago, we made a decision to either restructure and have 2 years with losses, or to focus on acquisition of new entities, basically by time, revenue, and EBIT. And then after 3 years to do a restructuring of the core Cenit team, because there we were kind of dormant beauty. You will see this in a later slide that I will show you. Over the past 13, 14 years, there was not quite in development, or not a growth development, and a kind of steady EBIT. And of course, we wanted to change this. So this is basically related to the pre-PPAs you can see here of an acquisition that we have done of Analysis Prime, but also of a one-time adjustment that we have done to get rid of 51 employees in France and Germany that were or that do not fit anymore to our strategy and to our performance level. Basically, all this change has been done on a performance level. So if you see here, and I would like to point out the order backlog on the left column, bottom line, you see that we have a major increase on the order backlog related to the acquisition of Analysis Prime, but of course also the growth that we have in the market. We have a shift from the PLC, so one-time software, to a kind of a SaaS model. So this is why you see now this shift, and it shows that we're heading into an increasing recurring revenue. We're at the range now above 60%, and we're heading to a 70% recurring revenue in our organization. So we're right in the middle of this change. On the right side, you can see we have quite a nice operating cash flow. The organization is creating a good cash flow. It's a good cash flow business that we're in. And since we haven't done any acquisition this year, and this was also announced and planned, we did not do any acquisition. We have, of course, also a good free cash flow as a consequence. If you then look into the EBITDA bridge, and to show you what the difference has been, so that you have a full view, you see that this project performance, this is the one-timer that I just mentioned. We had then currency losses that are affecting us in Q1. Mr. Trump has done a good job in this environment, and now the swing is in a different direction. So I assume that this will head in this direction. Then you see the analysis prime effect. They're below expectation at the moment. This is something that we're working on, which is quite normal for a new acquisition. They were, of course, a little bit over optimistic, and now we have to handle this to get to the next level. So nothing to worry, all in range as we have planned. So now if you look then into the segments, and I just want to show you when we talk about PLM, this includes the whole business except of documentation, and AEM is our documentation business. There you see that in PLM we had a slight increase. In AEM we're basically on the same line in Q1, which is just related to a project, and we're very confident that this will be a growth by the end of the year. This is what we have planned. Just to give you a glance, the first one, what our customers are. You see here kind of defense company on top, which is the aerospace customer that we're not allowed to mention because it's a defense customer. But you can see we've done here a nice project with a lot of further projects to follow and to come. Then we are in the metaling and the melting, and of course also in the automotive environment again, in Europe, in this case in Turkey, and the other one in Czech. So you see we're quite international and pushing our solutions into the market. Then, as I mentioned before, for the full last year, you can see we had an increase, a major increase in revenue due to acquisition, but also organic growth of 5.2%. And we had a nice increase in the EBITDA, as you also can see, and of course also in the EBITDA related to the acquisitions. Now, if you look at what I mentioned before, when I joined, since 2011, basically the company was in the right move and was, kind of a sleeping beauty. When I joined in 2021, we were at 143 million. And since then we have added now close to 90 million just on top by organic growth, and of course also by inorganic growth. And just to give you an idea what the inorganic growth looks like, what we try to do is by the acquisitions is expand our portfolio beyond Dassault and expand our business in the documentation business. This is why we acquired ISR and MIP, as you can see here. But we also expanded in the area of SAP, because this is a quite good business. Of course, any migration that is happening at the moment requires also our add-on services with our solution, our proprietary solution. And this is why we acquired Choristo and P and Active Business Consult, and finally also Analysis Prime last year, as I mentioned. And what we get as a kind of side piece is, as you can see by the number of employees, we get excellent experts on top for free that we introduce into our businesses and can expand our business. So if we then look at the share, you see, I think this is an overall development in Germany, kind of major dip that we all took in the mid-market for good reasons or not. This is up to you to decide. But what is important to see is all the analysts see us as a buy. All the analysts see the potential that we have. And to be honest, that's always what I say. We're in front of a perfect storm. We have a European industry, I must say, and of course, especially the German engine that is slowing down, that has certain difficulties in the automotive sector, in the worldwide economy. And if they want to be back on track, and if they want to stay with the productions in the European market, the only way they can do is by digitalization and automation. And to a surprise of many investors, Germany is far behind in digitalization, and there's quite a gap for us to catch up. And this is exactly the area that we spot on and that we're in. So any mid-market to upper large corporate organization are our customers, and this is what we're targeting for. And as I've shown you before in our presentation, we're very confident that we're going to make this, and that we will make a major move into this direction and increase our revenues, and also have a successful refocusing and restructuring of our organization. If you look at the shareholder structure, the only comment that I would like to do on this one here is you see a major free float of 65%. One of the reasons why our share price went down is that one of our shareholders with 8.08% was MainFirst, that for different reasons had to shut down the funds and basically sold them within 4 months. So that's why our share price took a major hit in the last year, came down from 12 euros to, in worst case scenario, even 7 euros. But now we're back on track. We have 8.3 million shares, so with 10% are in the market. This is, of course, a major dip and pressure for our organization. Prime Pulse is a German private equity company that is holding 28%, as you can see here. These are the former, these are the former owners of Cancom that are behind this one. So that's it in a nutshell. And now I would leave it up for questions. Up to you. I think I had 30 minutes, so I should be in time.
Yes, excellent timing, and thank you so much.